Joining me now is Michelle Schneider. She's the Chief Strategist at Market Gauge. Michelle, welcome to the show.
Thank you so much, Ashley. It's such a pleasure to be here.
So another earnings season is ramping up. What are your takeaways so far?
Well, certainly we've had some really strong earners, and the expectation was for that. And with earnings, what's always interesting is whether or not the expectations beat or miss, and then, of course, the guidance going forward. And I haven't heard a lot about guidance at this point, but certainly we're going to be impressed with the earnings that you just mentioned at the top. But unfortunately, yesterday we also saw the big miss in Netflix. So it's going to be interesting to see how that impacts the market going forward today.
And what do investors need to keep in mind when looking at Mag 7 earnings compared to the rest of the S&P 500?
Well, the expectation, again, is for anything north of 17% overall in the Mag 7, where it's only at about 6 or 7% in the rest of the 493 stocks, right? So that means that we have very lofty expectations for these Mag 7 stocks. And clearly that's warranted, considering that they have, if you're just looking at Amazon and Google and Apple and Meta, they have $800 billion in capex that they're using to create more data centers, more AI, more products. Whereas the rest of the companies, like an OpenAI, even though they've had some great news, is really at more like an 80 million. So there's no reason to believe that these companies can't continue to do extremely well and gobble up the smaller ones. Of course, the question is just the cycles of the market. Do we get a correction regardless of what the earnings do?
All right, CPI data is coming out on Friday. What do you anticipate, Michelle, that we're going to see?
You know, inflation is such a funny little thing, and I don't believe that the statistics necessarily really reflect what us as the consumers feel when we go to the supermarket or we go out shopping or we pay for insurance. So if you're looking just strictly at what the numbers are going to look at, oil and gas, which is not really a part of it, but we know that oil prices have come down. That's a good thing. Whereas health insurance prices have gone up. So I think we're not going to necessarily see a real dip in CPI, nor do I think we'll get a really inflated number. We'll probably show inflation sort of at a steady pace, and we'll leave it at that.
All right, and according to the latest data, investors think that we will see potentially 2 rate cuts before the end of the year from the Fed. What do you see for the end of this year and going into 2026?
I do believe that we will have rate cuts. I also believe that Powell himself just said that they're ending QT. I know that money supply is at record highs, and I can see what the yields are doing just in the market every day. We had recommended long bonds, TLT, calling it the unloved becomes the loved, and that's a double-edged sword. So talking about the Fed lowering rates, we have to say, A, are they doing it because of pressure? Are they doing it because they really believe we're heading into a recession? Are they doing it because they don't believe inflation is going to be as sticky as we thought because of tariffs? And I think if we had to choose one of those three, I would go with more fears of recession, because at this point, if we start to see the long bonds really outperform, we haven't seen that yet, the S&P 500, that's something what people should note.
All right, gold and silver recently had their steepest sell-off in years. That's after, their rally. What is your take right now on precious metals?
Well, we were extremely bullish, and we actually sold out of both gold and silver last week, maybe slightly early. But you could see the margins were going up. That's a big factor. Everybody was piling in. I'm an old commodities trader, Ashley, and we used to say when the shoe shine guide tells you to buy gold, that's probably the top. And that's kind of what was happening. The question is what happens from here. And I think the best tip that I can give in this correction is to watch the ratio between the gold and the silver. Because right now, there's a certain level where gold trades 79 or higher times silver. That could be sort of more bearish for both of the metals, even though gold may not fall as deeply as silver. But if that flips, if it goes under 79, in other words, if gold starts trading less than 79 times the value of silver, that can be very bullish for silver. That's where my eyes are right now.
Right, and given the volatility right now, all of the economic headwinds, how are you advising clients?
Well, we like to look at the things sort of under the radar. I've sort of become known for my vanity trade, which is really what happens as a result of the diet drugs to society at large. because it is making a huge impact in so many people's lives, losing weight. So what are they going to buy? Skincare, nutrition. They're going to go to the gym, wear nicer clothes. We could see alcohol sales, fast food sales have plummet. So we're looking at that space. Not only just Eli Lilly or Novo Nordisk or Viking Therapeutics, but also Ulta and Elf and Stitch Fix and Etsy, Planet Fitness, all these areas that people are going to start to consume regardless of what the economy does, because they feel good about themselves.
Is there anything else under the radar that we might not be hearing about now you think will make a big splash in the coming months?
Well, one just took off was India, the India Country Fund, because now the deals that they're making with the administration to reduce tariffs and not buy oil from Russia, that has broken out of a big base, really had underperformed compared to, let's say, China or Vietnam. The second thing would be anything infrastructure, oil and gas. We think that the oil glut story is a little overblown, and we know commodity supply demand. So we're looking more at the pipeline. So we've been recommending Alerian. It's an ETF that deals with a lot of the gas companies and pipelines. So that would be AMLP. That's the kind of stuff we're really focused on right now, but we still love some biotech too. That's another big area I think that could explode over the next couple of months.
All right, Michelle Schneider, Chief Strategist at Market Gauge, thank you so much for joining us at the New York Stock Exchange and for your amazing insights.
Thank you so much for having me.